The more I talk to people about finances, people often ask me, how much money should I have in my savings account? It's a really good question. How much do you really need on hand in order to make sure you're safe and you can continue to live the lifestyle you've become accustomed to? In this video, I'm gonna give you 5 things to think about when you're setting up how much money you should actually have in your savings account. Because nobody wants to have a month where they run short on money and not have money to back that up. So there's a couple things to think about, but most people don't think about all of these things in order to set up this system. Because a savings account is not just a place to hold money, it's a strategic investment tool. Let's get into the video. So the very first thing you have to know is, what is your expenses? The expenses you have every month really dictate the amount of money you need on hand for just in case. So how much money do you require to cover your expenses for a month? In order to know this, you'd have to list out all of your expenses and make sure you understand, what do I really need in order to cover me and my family for a month? Without knowing that number, it's really hard to dictate what we need in our accounts, especially in our savings account, in order to back that up. So we want to list out our expenses and see where we're at every month for our money. The second thing you want alongside of your savings account is an ER fund. You want a fund in order, if something happens that's really an emergency, you have some money to knock that out. If a car breaks down or a roof starts leaking and you need to fix that, or you have something in your life that you need to pay for that's pretty large expense, you want to have that covered so it not only doesn't wipe out your savings account, but it doesn't impact your income and put you into debt. A savings account is one thing, but we want to build our ER fund before we start building a savings account. So what you can do is look over the last year or two of your expenses, see what kind of emergencies have come up. Have you had a car go bad? Did you have something on your house that needed to be fixed? What kind of emergencies came up? Did you have a kid that all of a sudden needed braces or broke their leg and the copay was a little bit higher than you thought and you had to pay for a little bit more of that insurance? Or you don't have dental coverage and you needed a crown? These are things that will rob your savings account and really make it hard to get ahead. So when you ask how much do you need in your savings account, that's a secondary question to making sure we have an ER fund. It's essentially an insurance policy against your savings account. It makes sure you're not dipping into that every time you need a little extra money to take out an emergency. And I like to have 3 to 6 months expenses in an emergency account. If your expenses every month, your mortgage, your car, your food, your gas, everything you have is $4,000 a month, I like to have in the $12,000 to $24,000 a month in an ER fund to make sure I'm covered. Because again, let's say you lose your job and you have no way to make income. That'll give you 90 days to readjust and pivot to find something else, or even 6 months. Start with 3 months and then we can move to our savings account. And if you feel like 3 months isn't enough, then we can beef that up a little bit. Because again, as the emergencies go up, that account should get a little bit bigger. As the possibility of emergency rises, then that account needs to get a little thicker. Now, what is a possible rising emergency? The biggest one is children. The more kids you have, the more you need into that account to make sure if one of them needs something or one of them hurts themselves and needs to go to the hospital, you have the money to pay for that. If you have older cars, that money needs to be a little thicker. Believe it or not, if you have really new cars, you don't really need emergency for new cars. So again, even the age of your car changes that amount. So I'd like to take my expenses and take 3 to 6 months of that. 4 months seems to be a sweet spot. So if you take like 4 months of your expenses, put that in a ER account, it's kind of an insurance policy against your savings account. So a lot of people will ask me, Mike, how much should I keep in my savings account? I will return that question, well, do you have an ER fund or an ER account? They're like, no, what's that? And then I'll explain of why we start with ER, then we move to savings. Because the truth is, we want to start with ER because after you build up to 4 months, you can leave that alone. You don't have to put more money into that. Then you can start building your savings account. And then when you use this, if something comes up and like, oh wow, we had 4 new tires we needed and that was $900. We weren't planning that this month. We can pull for our ER fund and then we can repay that over a few months, pile that back up. Then we go back to our savings account. Because again, that ER fund stands in front of our savings account and protects it, so we don't always have to dip into it every time a tire goes out, a roof leaks, or a kid needs new braces. Before we get to the last 3 tips, make sure you subscribe to our channel and smash that thumbs up button. Also, hit that bell notification so you get notified every time we do a video, which is every single weekday. The third thing is cash is a depreciating asset. So when people ask me how much do I need in my savings account, my answer is not much. And here's why. After I have that ER fund built, the more cash you have one of the fastest depreciating assets in the world. And here's why. Especially at the time of filming this video, we are seeing the government printing a lot of money. Well, we know that's going to devalue the dollar. So as the dollar goes down in value, the more dollars you have, the less value you will have over time on your cash. Having a pile of cash in the bank might make you feel safe, but it's a very bad financial practice and will cost you a lot of money over the years. I'm really not a savings account person. Do I have a little bit of money on hand? Yes, but in a few tips, I'll tell you why I keep that on hand. So understand, cash is a depreciating asset. Sometimes in the investment world, we say cash is trash because it's devaluing. So what we want to do is keep our money in things that are increasing in value, like real estate. One of the reasons I park almost all of my money in real estate is because it produces money every single month. I park it in cash producing real estate. This isn't real estate that's just a house. This pays me every single month. And guess what, Mike? But what if the economy tanks? Okay, I lose that value. And it still pays me every single month until that value returns. So having it in the savings account doesn't do you any good. Might let you sleep at night a little bit, but imagine what extra positive cash flow would do every single month. Not only could you put that in your savings account if you wanted, but now you're investing in a money machine, not just parking your money in a parking lot where it just is devaluing every single day. Growing up, I grew up with parents that were really, really good with their money, but I learned some really poor practices. For example, I wonder if you've ever heard this term, money doesn't grow on trees. I used to hear that all the time growing up, money doesn't grow on trees. Is people that say money doesn't grow on trees obviously don't own cash producing real estate, because my trees grow every single month, whether I water them or not. And that's the power of parking your money in a money tree versus just parking your money at the bank. And the fourth tip about how much money you should have in your savings account depends on your income. Do you have a stable income, or are you in an industry that's questionable? If you're in an industry that's questionable and you don't know if you could have a job tomorrow or next week, then you really want to make sure that you pad that account more. Or maybe you have a seasonal job. For example, one of my cousins works for a road commission for the government. They work on all these roads throughout the country, but in the winter times, because he works in the Midwest, in the winter, they're really, really, really slow because it's really hard to do roads in the cold weather they get. So his hours get really, really decreased in the winter and go up to 90 in the summer. Well, the truth is, if you're in a job like that, you might want to have a little more savings for those months that you need to stretch where you're not making as much. So your income patterns dictate how much you have in that account as well. If you have an ultra high income, then again, it dictates you don't need as much. If your income is really high and you have a pretty stable job and you make 6 figures a year, you don't really need to worry about a bunch of savings. I would focus more on having cash producing investments that are paying you every month than having padded account that keeps money in your bank, because again, having that money, devaluing asset. If you have a high income, money's coming in all the time. The savings account becomes really less valuable the more your income really is. And you have to ask about your income. Are you a one-income household? If you're married and you're the only one in your home that works, or you have a partner and only one works, or you're single and you're the only income, you might need to pad your savings account a little bit more just in case something does happen to your job. If you're a 2-income household, well, that changes things a little bit. One person loses their job, somebody else can continue with that. So again, the amount of income you experience each month in relationship to your expenses can dictate your savings account. If you make twice your expenses, that's pretty good. You can have your expenses all paid for, put a little bit into savings, put the rest into investment. But if your income is really close to your expenses, you're not gonna be able to save much anyway. But the truth of the matter is, the closer it is to your expenses, the more savings you need. But the less savings you can actually give. And the fifth thing I talk about with your savings account is your investment patterns. If you are somebody that invests a lot of money, then you need to have a little bit more money on hand. In my company, we keep 6 figures on hand at all times because we invest in big deals. So if I'm investing in a lot of deals, I want to have money on hand so I don't miss out on opportunity. If you invest in your 401k at work and it's just very methodical and it's every month you get some taken out and your company matches it and it's very rhythmic, perfect. You don't need to worry about that. Then you don't need to have as much in your savings account. Because again, it's being taken out of your check, so your investment is already subtracted before you put into your savings. If you're not in the investment game yet, please get there. because I really don't just want you to have a savings account that gives you a pillow to sleep on at night. I actually want you to build financial freedom and wealth to impact generations to come for your children and their children. And the way you do that is by having cash producing real estate or cash producing assets that pay you month after month after month that also increase in value. One of the reasons I love real estate as my primary investment is while it increases in value as a rule, over the years when it's crashed, we call it reverse gravity. It always comes back up. Always. It always has, it always will, because real estate is a controlled supply. We only have so much of it. We can build some more, but we can only really have so much real estate. And that's why owning it is a good thing to continue to own, because it not only produces income, but it will continue to increase in value. I also have a free gift I want to give you today. I have a free 60-minute masterclass on how to bust into the multifamily market. No matter what you have in your savings account, we need to get you start investing to build wealth. And I have a free 60-minute training. If you click on a link in the description, you can have my free multifamily masterclass where I walk through how to bust into the multifamily market, start creating those passive cash flowing assets.